Tonight, it's all about casinos, beer, and former trade unionists. It's a story that involves HCI, SABMiller, and Tsogo Sun. This is Tonight. I'm Bruce Whitfield, and tonight we look at the ins and outs of the deal that Tsogo Sun, which owns Southern Sun Hotels, Monte Casino, concluded with SABMiller. Or did SABMiller concluded with Tsogo Sun? Joining us, Tsogo Sun's Chief Executive, Marcel von Aulock, and he's going to be talking to us this evening all about the deal, the most spoken about deal of the year so far. It's absolutely massive. SABMiller, a long-term investor in Tsogo Sun, getting out. They've told us why. Are you delighted that they're gone, Marcel?
I wouldn't say delighted that they're gone. I mean, they've been a great shareholder for us. So they funded the expansion in the casino business. They supported the group when early 90s, when the hotel business in South Africa was falling apart. They've been a really nice shareholder to have. But we have been a bit of a dud listing because essentially four parties controlled 90% of the stock, very illiquid, enough for day traders and so on, but big institutions had a lot of interest in us and couldn't get into the stock. There's a lot of interest in the company because with a market capitalization of about 30 billion, we're bigger than Sun International, City Lodge, Piermont, Protea, all added together. So there's a big part of the industry that was visible there, but that institutions couldn't actually get access to. And by SAB making their shares available, that's changed.
Well, they want to focus strategically on brewing, which is what they do. What they're doing now is making you considerably more tradable, giving you opportunities, of course, to place shares in the open market. Has it been decided where the shares are going? Who's going to be your big institutional shareholders?
No, it hasn't yet. The book actually closes today.
Okay.
So we've been on a roadshow for the last 2 weeks. We did presentations to all the South African institutions. We covered the UK and the US for emerging markets funds. A lot more than I expected.
Okay.
People knew the company, they knew us. There had been a lot of interest around the stock. I think the anticipation of, at some point, clearly SAB was going to exit because it's non-core to their brewing, and everyone's been waiting for that. So as soon as that announcement came out about a month ago that they were considering what to do, the international institutions have been doing a lot of work on us. So I was pleasantly surprised.
What do they like? Do they like the hotel story? I'm assuming it's a gaming story. They like an emerging markets gaming story.
It's gaming and hotels. It's a South African story. Our industry in both of those businesses are absolutely geared to the South African economy, which is a bit of a scary place at the moment. But we're a locals gaming market, and we're a local business hotel market. So they like the South African story. They understand that it's under pressure, but they believe there's a long-term good South African story.
Are you saturated in South Africa, do you think? Have you gone about as far as you can within the borders of this country?
Not saturated. I mean, we've got big market shares in both industries. Hotels, there's always a deal to be done, but they're small incremental transactions. Casinos will be bigger. We've announced the deal to buy 40% of Grand West with Sun International, so there's a big allocation of capital. That's 2.2 billion rand. And then in this process with SAB, we're buying back 2.8 billion rand of the stock, which is a big investment for us.
Sure.
So it's kind of an internal looking one. But ultimately, we're going to, if we want to expand in terms of properties and so on, we're going to have to go offshore.
Where is the strategy looking then? Because we've seen, for example, Sun International try its hand at various properties. It's gone into parts of Africa. It's on a peninsula in Luanda, and they've gone to Zambia, and they've looked at interesting things as far afield as Chile, and that's been complicated through earthquakes and all sorts of other issues that they face there. What is the Tsogo Sun thinking?
So we have a hotel business in Africa. We've been in Africa for 20 years. And so we continue to expand that. We put $100 million into that last year. We bought the hotel in Nigeria. We've expanded our hotel in Mozambique. That should open again in about a month. But our immediate focus is actually not to go offshore. It's taking our existing operations in South Africa, making them bigger. So we've got great licenses in growing areas. And we've been working very hard with the regulatory authorities to get capacity increases approved.
What are those regulations? Because one goes into a casino and it's just all lights and glitz and noises happening, and lots of people putting money into machines and onto tables. But you are restricted by license conditions as to how much floor space you can take up.
So they restrict your number of positions, a number of slot machines, number of tables that you have. And what we did last year is we had a deal that we did with the Gauteng Gaming Board where we got a 30% capacity increase in Gauteng. We've allocated that across Silver Star, Gold Reef City and Monte Casino.
But how does that capacity get used? Because I don't go to casinos all that often, but when I do go in, they seem pretty lonely, empty places.
They have peak periods and off-peak periods. So if you go in on a Tuesday morning, it's going to be quiet. You know?
That's maybe my
But
mistake.
if you go in on a Friday night, I mean, we use that example a lot in explaining the trading. You know, Monte Casino on a Friday night's full. We've got 5,500, 6,000 parking bays. We continuously run out of parking. The restaurants are full, the casino's full, everything's full. The level of spend can go up and down, but the volume of people is enormous. And so ultimately we're going to need more capacity. We need to build more to get floor space to put the equipment out on. In a casino, you're probably full when you're at about 70% utilization, because above that it means that you're not getting the machine you want to play at the time you want to play, and then people are put off.
And people lose their, I suppose, I mean, it's an impulse buy. People are either depressed and want to make the money back, or they're on a roll and they think they can make more, and if you lose that momentum.
And there's no entertainment in sitting around waiting. So it's one of those discretionary spend. If it's not fun, people aren't going to do it. And the only way it's going to be fun is if the environment's a pleasant environment, and they've got access to what they want to do when they want to do it.
So what, is it a 5-year plan? So South Africa, you can do capacity expansion in South Africa. There's no need to go and take additional risk elsewhere. But if a juicy hotel comes up in Nairobi, you might be interested.
Absolutely. I mean, we are opportunistic, and we've been very acquisitive over the last 6 years. Our focus is building out the projects in South Africa, and that will take 3 years to get most of the construction work done. And we are looking continuously for opportunities offshore. But the two big transactions, buying the 40% in the Western Cape and buying back our own shares, does change our balance sheet. So we've traditionally had very low levels of debt, about 1 times EBITDA, 5 billion rand or so. We think we're going to peak out this year at 11.5 billion rand of the debt, which is a different number. Still quite manageable within our business, very happy with it because we're allocating it to good projects. But that makes the investment decision pretty simple after that. It's like having a bond. And if you get spare cash, pay off the debt. You don't have to think too hard, and you're really not going to push a project to work.
And also, your mind is being focused by the fact that the board of HCI has come to the party and said 5 senior directors at Tsogo Sun, you guys will get 200 million rands worth of interest-free loans. You've got a big chunk of that in your personal capacity as well. It tends to focus the mind a little, I suspect.
I mean, least of all that it does is it takes away your salary because of the fringe benefit tax, and you have to live off dividends. So, you know, dividend policy becomes quite a thoughtful thing as opposed to now we can do better with the money than the shareholder. And it does got downside risk. So, you know, if the shares go down and you can't just pack it up and go do something else because you've got to pay the loan back.
You've been criticised, and HCI has been criticised, a bunch of former trade unionists incentivizing 5 capitalists to grow a business. But it's worked well for Brait. Similar structures. It's worked very well for the First Rand Group by making the founders of First Rand made money available in the sizes that the executives wanted it, and we've seen considerable growth for Brait. We've seen considerable growth for First Rand over the last 5 years since these structures have been in place. There is risk for management. There's also opportunity for management.
Yeah, I mean,
does it translate in the same way for the shareholders of HCI? Clearly, Johnny Copeland and Marcel feel so.
Look, they don't give away much, so they're obviously incentivized to make this thing work. The one interesting thing, we've just done this roadshow internationally, talks to all these investors. It came up as a consistent question from every one of them. Do you own stock? And if not, why not? And when we explained the structure as part of this, it was a tick on every one of their boxes. It's a fundamental issue that they don't trust a company if the executives don't own shares, real shares in the business.
Absolutely. But why not do it in the old-fashioned way of share options? Why structure it in this way with a big number looking loan, which looks like a freebie, which it's not, which looks like a freebie being handed to directors to turn you into fat cats at the expense of the cleaners and the bellboys in the hotels?
Because it's actually cheaper for the company. So we've been very sensitive about ever issuing shares because we don't want to dilute HCI. So Tsogo has never done share issues. We reverse listed into Gold Reef, and then part of the SAB exit we're buying back and cancelling shares. Options relate to new equity being issued. So up until now, we actually ran a phantom share scheme where you get paid cash out but settled in cash from the company's account as opposed to equity. What this does is it allows us to get equity essentially made available by SAB, because we're buying in the market.
Fair enough.
So there's not new shares coming into the business. It does what you would normally do is get your options over a period. This is a one-off thing. We don't get any more. So we don't stay on we don't get new allocations under the phantom share scheme. The loan is not an access bond. You can't sell, draw back, do whatever you want to do with it. It's a one-off thing, and this has to now work. Options would result in issuing shares all the time.
What about incentivizing executives number 6, 7, and 8? Because they lose out on the scheme. They
No.
don't participate. There's a risk there that they go, Sun International, give us options. Let's go off there.
So we have the phantom share scheme, which has been
so
very
that
successful within the group.
remains.
And I've pushed that in the last 2 years much deeper into the business. So that covers about 260 management level people. It goes right down to the lower level management. And that's been very successful because we've been able to do that without dilutory effects to our shareholders. And those people don't have downside. So if the company doesn't grow, they're not going to get anything out of it, and they understand that. It's a phantom share scheme, but they don't have to pay in if the company falls apart, which not everyone's going to be able to do that.
Does this structure contribute to the inequality debate? Does it detract from the inequality debate? What is your view on the bad press that you've been getting?
Look, I thought the press was a bit unfair, and it's not all bad. I mean, there were other articles that were positive about it. Anyone who asked any institutional investors got the answer, this is great. I don't think that the way it was handled, particularly in Business Day, was any good. But we knew that was going to happen the minute we got the questions from the journalist. I mean, it was proper aggression. So that you take with the job. I mean, it doesn't take
but you are in an industry which is heavily unionized. How does this help when it comes to labour negotiations next time around?
I don't think it'll make a difference. The unions also understand that there are different levels of pay throughout the organisation. We have very good labour relations.
Does it help to have HCI as a big shareholder from that context? They're not trade unionists anymore, Marcel and Johnny, but they understand the union movement better than most.
Well, it does help me understand unions better, and certainly when we are in conflict with the unions, you get to see both sides of what drives people, because you have insight into how the other party's thinking. But we really haven't had labour dispute in a long time. We've had one strike at Monte Casino in the last 10 years, and there was a renegade union, a little bit like the AMCU type of thing, that tried to get itself going. They subsequently got de-recognised because members weren't interested. But we're also not a terribly difficult industry. It's a relatively pleasant work environment. The pay is good. It's a sexy industry. We don't have the social problems that mining has. So we don't have migrant labour. People are not having to go 3.5 kilometres underground. It's not really an issue in our company. And we've got a very young workforce who are fairly ambitious by nature of the industry. And I think our average employee age is 27. So there's a buzz around it that this type of media doesn't really affect.
I had my CV on the table. I'll crumple it up. Not in the demographic.
Too
That
old.
was Tsogo Sun's Chief Executive Marcel van Aulock. Thanks for watching. There'll be more tonight, tomorrow. And do give us a comment on Twitter this evening. What did you think of that particular discussion and all discussions that we have on tonight with Bruce Whitfield? Follow me at Bruce Business, or you can do it via the @CNBC Africa hashtag. Until next time, bye-bye.